Mark Anthony with Mercury Time Price Analytics, and this is a members video regarding the live chart screen and the different panels and indicators that you see on it each day. Now, this chart runs on a 12-minute cycle per bar. That is our standard day trade time cycle. There's an important significance of the 12-minute cycle. Over here in the top left, this is our swing trade chart. This runs on a 27-minute time cycle. We're going to get back to this chart right here. This shows the day trading algo, but I want to start over here because in order of importance, the most important thing that you want to pay attention to is the purple pivot on this 27-minute chart. This purple pivot is what I call the matrix pivot. If you've ever seen a cutaway of a nautilus shell, you see little chambers starting in the beginning, and each chamber, as you go around that circle, those concentric circles, each chamber has the same mathematical relationship, the golden ratio. Well, this matrix pivot, think of it as the center of that chamber of that nautilus shell. Everything revolves around this purple pivot, the matrix pivot on this top left chart, which is a 27-minute cycle per bar. This is the swing trade algo. Now, the bigger cousin, so to speak, of the matrix pivot is the purple pivot down here, the third chart from the right. This is the matrix pivot on a much longer time cycle. It's a proprietary time cycle. It's over 2 hours. And when I say proprietary, there are master time cycles in terms of minutes per bar that institutional algorithms run on. Every one of our algorithms runs off a fractal of those master time cycles. And the longest time cycles are over 4 hours per bar. For example, this chart here is over 4 hours per bar. And the purple pivot here is equally important. So here you have the matrix pivot. Here you have the longer cycle matrix pivot that's over 2 hours. Here you have the matrix pivot on the master time cycle. In terms of the matrix pivot, let's go back up here to the 27-minute chart. The rule is real simple. When price is above the matrix pivot, you only have two choices. You're either long or you're flat. When price is below the matrix pivot, you only have two choices. You're either short or you're flat. Long above, short below, or flat. Period. End of story. If you do that one thing, I promise you, you will make more money with these systems than anything else that has ever been offered on the market. I've been doing this for 37 years, and I make that statement with zero equivocation. This purple matrix pivot is the most important intraday trading metric. Now, because the purple pivot here runs on over a 2-hour cycle, this is more of an intermediate pivot, but it's no less important. When the market is trending up, as it has been since the Fed QE, this video is being recorded July 13th. Since the Fed got involved with quantitative easing and putting a floor under the bond market, the market has relentlessly trended upward, and when price corrects, it tends to come right back to this purple pivot, and then it goes back up. And today we saw a strong sell-off at the end of the day. So here you broke the purple pivot on the intermediate cycle. Again, this is over 2 hours long. This is over 4 hours long. So these purple pivots are very, very important. Now let's take a look at these two charts up here. This is a faster cycle. This is only 5 minutes, and this is a 12-minute. And the way you use this is real simple. You've got a simple Bollinger Band here. Anybody can use a Bollinger Band. What we've done with the Bollinger Band, though, is we've put these two hashes, a purple hash and a white hash, on both of these charts. And the purple and the white hash, it's very simple. When in purple, think of purple as the core or the baseline. When the white dash is below the purple, white, see white below purple, the short-term trend is down. And I'll pull this back a little bit. When white is above purple, let's get a good look at it here. When white is above purple, the trend is up. And when they get close together, then you're either going to get a transition from up to down or down to up. In this case, white was above purple, the trend was up, the white and the purple compress, and then they roll over, and the white goes, well, in this case, there we go. But when those two come together, you're either going to get a consolidation and a continuation of the move in that same direction, or you're going to get a reversal. The way you use this, in this chart and this chart, do the same thing. This is just a very fast 5-minute per bar cycle. This is 12 minutes. And the way the trigger works on this is it works off the Bollinger Band. But just trading off Bollinger Bands can get you in a lot of trouble if you don't have something to confirm which direction the trend is. Because, for example, right here, in fact, let's go back to this morning. Let's pull this all the way forward and just work our way back. Because if you're just trading off a Bollinger Band and price is below it and it comes up to the Bollinger Band, how do you know whether to buy or sell? Because if the market was selling off and price comes up into a 5-minute Bollinger Band, typically that's where your second chance short is in that direction. Similarly, if price is trading above the middle Bollinger Band and the market's trending up and it comes down to the Bollinger Band, well, that's your dip buy. Well, how do you know whether to get long or short when price encounters the Bollinger Band? You don't. That's what these purple and white pivots do. So if price is below the Bollinger Band, let's try and find a good transition here. All right, here we go. All right, so price is below the Bollinger Band, comes up to the 5-minute Bollinger Band. And here you get a little bit of a head fake, actually. So this is a case where price goes from below to above the Bollinger Band, you get long. But you have to get out of that trade when it comes back below the Bollinger Band. And your early warning would have been when price came down below the purple pivot on this previous bar. That was your time to get out right there. But what we've done is we've taken a Bollinger Band. And on Bollinger Bands, just at their very basic essence, you're long above the mid-band, you're short below the mid-band. But what these two little algos here do is they let you know as price is coming up into the Bollinger Band whether the trend is higher or lower. So let's find a spot today where we hit the high up here at 32.22. And you can see the white and the purple are compressing. Price comes down into the Bollinger Band. When price is trending strongly up, your dip buy is typically when it comes down into the Bollinger Band, right? Well, in this case, market started to get choppy and go sideways. And you can see the point at which price came below the Bollinger Band and the white crosses over. That is the spot where you get short. Now, again, today was choppy. This isn't the best example of this because you had some chop here. But here's a better example. White's above the purple, price is above the Bollinger Band. Price comes down into the Bollinger Band. Now, at that point, how do you know if that's a dip buy that is going to continue to make higher highs or whether you're going to get a reversal? Well, notice right here, in fact, we'll take these couple bars. You see the difference between the white and purple there? They're closer together here. Here they're very, very close. Here they're right on top of one another. White is just very, very marginally above the purple. Here the white is below the purple, and you get a cross through the Bollinger Band. That's your short trigger right there. That is one of the best day trading. If you're a trader that likes to play both sides of the market, long and short, using this 5-minute Bollinger Band in tandem with these two little algos, the blue algo and the white algo, it's beautiful. So you're taking the typical metric of a Bollinger Band where using the mid band, you're long above and short below, but now you have confirmation. Now, this is a 5-minute chart. This is a 12-minute chart. This is the same thing, but on a 12-minute chart. So this is going to take longer to trigger. But if you don't like to trade as frequently in and out during the day, then you use this 12-minute version of it. Now let's go down here for a minute. This is the VXX, but it's the inverted VXX. You're probably familiar with the VIX, which is the volatility measurement of the market, but more accurately, it's the volatility of options premiums. The VXX is the volatility measurement specific to the ES, the S&P futures contract. Now, as you would imagine, typically a volatility measurement like VXX is going to have an inverse correlation. So if the futures are going up in price, the VXX is going down, and vice versa. If price is going down, the VXX is going up. What we've done here is we've inverted it. That's what that minus symbol is. So the platform you're looking at is Thinkorswim. On Thinkorswim, anytime you want to see an inverted chart, you just put a minus sign. What inverting the VXX does is it gives it the same orientation as ES. So therefore, what we're looking for here is a divergence. If price is going up, and we saw this big time today, price broke at, it was just right around 2 o'clock, maybe a little bit after 2. But if we take this VXX and move it back, in fact, let me zoom that out. You'll see that price rolled over at 2 o'clock and went down. When was the VXX rolling over? At 9 o'clock this morning. That told you that this whole move up was nonsense, but you can get more granular on this during the day. And when you start seeing this kind of activity, again, because it's the inverse VXX, it's supposed to move in the same orientation as ES. So this was 9 o'clock this morning, and let's take our day trade chart, move this back to 9 o'clock this morning. And you had this strong move up right out of the gate when the day session opened. Here's 9 o'clock, there's 9:30 right here. This is 9:30 in the VXX. This told you something was wrong. And as you go throughout the day, look at that. I mean, 2 hours of this trending down. So that divergence, and this went on all day long, but that tells you that something is going on. And the bigger the divergence, the bigger the move you're going to get when ES decides to not be divergent anymore, when it decides to catch up to this VXX. The VXX runs till 8 o'clock in the evening, so this doesn't run all night long. If you like to trade Globex, keep an eye on what this does between 6 o'clock Eastern and 8 o'clock Eastern. Sometimes it's a little bit of a head fake, but there's times if you see really strong directional move, a VXX, when Globex starts from the first couple of hours from 6 o'clock to 8 o'clock, that's important. Right here, right next to it, and again, you will get fake out moves in this too. So you're looking for a persistent divergence in this VXX relative to ES. Here we've got the S&P 500 advanced decline line, and we've put oscillators. We put oscillators on this. Now, don't get too carried away with oscillators on the advanced decline line. We're just using this more as a gauge of market breadth. Now, since we're recording this on July 13th, I think it's important to note that the first bar on the advanced decline line, it was positive 428 for the S&P 500. So that gives you an idea what a significant reversal today was. Whether there's a continuation of that downside, who knows? But you know, when you see this kind of divergence in the advanced decline line, it went from positive 430, call it 430, to negative very quickly. So, you know, based on that, we could see some follow through. I mean, you had a 70 handle move in the last couple hours, but I don't want to get off the subject of this video. But here what you've got is the advanced decline line with a couple of our proprietary oscillators on here. This cyan sloped line is the momentum algo. So this cyan line here on the 27-minute chart is a momentum algo, same thing as here on the 12-minute day trading chart. Moving over here, as I mentioned in the beginning, this is a 27-minute chart. This purple pivot is the matrix pivot. This is the primary long cycle, intermediate cycle, if you will. It's over 2 hours. This purple pivot performs the same function. It's very important that you pay attention to this too. And then here you have a very long cycle. Forgive me, I mentioned this was the long cycle. Forgive me. This is a tick chart. You can see by the little sign right here. I've got 5 different computers on my desk, and on one of my other computers, this panel is a chart that's over 4 hours. So forgive me, let me correct. This is a tick chart. We use a proprietary number of ticks. The number sequence that we use, it is as a mutable a number sequence as there is throughout nature. And this particular tick number is very long. Put it this way, it's between 8,000 and 10,000 ticks. The purpose of having the tick chart here, notice you have the white and the purple hashes. So when the tick profile is trending down, like you saw here after we had the high, what this is on here for is so you don't get out of a trade too early. Price came down here from 32.22 down here to 31.80. And I'm sure when it bounced up here to 31.87, people thought we were going right back up. Well, the tick indicator told you not to get out, because if the momentum was switching back to the market going up, then these ticks, and again, you've got a purple and a white hash on each bar, they did not get any more narrow. You see how wide they were from here to here on this bar. They continued to be very far apart. So until you see that tick relationship of this white and purple hash get close together, there's no reason to get out of the trade. So there was literally no reason to get out of this trade till way down here, about 70 handles. The 2 little tick oscillators, the purple and the white, they didn't start to get close together until after this thing had already come down 70 handles, from 32.22 to low 31.50s. And then over here is my little baby. These are our proprietary oscillators. We use these on multiple time frames, and these are so important that we've got a whole second live chart. This is the main live chart screen that you see. So every day when you log into the live chart, you're going to see these same 9 panels, forgive me. But here we have the oscillators running on a 12-minute cycle, same as the day trade. Now, these oscillators are varying lengths, but there is a mathematical sequence, so every one of them has a relationship to every other one. Every one of these oscillator lines has a relationship to one another. And from the fastest oscillator, meaning the shortest time frame, to the longest, you have this long dashed purple line, and then you have three white ones. The dashed white one is the fastest, and then increasingly longer length, meaning a more gradual slope. From the dashed white one, you have the solid white one, and you have the dotted white one. Now, normally these three will be grouped together. When this dotted one starts trending down below other colors, in other words, see you've got this cyan one, this is a longer cycle than this white one. And what that simply means is, think of it this way: the short-term trend is down. The faster oscillator, this is a faster oscillator, this dashed white one, than this cyan one. And if the faster oscillator, think of it no different than a moving average cross. Okay, let's say you take a chart and you put a 20-period moving average and a 10-period moving average. Well, if the market's trending up, that faster moving average of the 10 is always going to be above the 20. When the market's trending down, you get a crossover, and then it's the opposite. The fast one, the 10, would be below the 20. So when you get an oscillator like this dashed white one that is faster than the cyan, that's also indicative that the trend at that particular point in time is down. So after the white ones, you have the cyan one, and then you have these two orange ones, and you have the purple one. You don't have to know what these oscillator numbers are. All you have to know is the purpose of having this on here is to give you target prices. So in this case, price is going down. Well, if it goes through one oscillator, your target's the next one. If it goes through that one, your target's the next one. Notice here you had a bounce, bounced right here, and where did it stop? It went right back up to the confluence of the purple and the white. So then you come down and you break this oscillator. You come down here into these. You have a bounce back up, almost back up to the cyan one, and you break again. And so these are tools to keep you from getting out of a profitable trade too soon. Let the trade run its course. And what this allows you to do is to take incremental profits. Let's say you're trading a 3-lot. Well, you can take incremental profits as price moves down from oscillator to oscillator to oscillator. And it works the same thing when price is trending up. Let's say this, hypothetically, is the bottom for the night and it starts trending up, and you were long. As it gets up into each of these, you have opportunities to take incremental profits. Now, I'm not going to spend a whole lot of time on the day trading algo. There's a whole nother video that runs about 45 minutes just on this day trading algo. But very briefly, the way this works, the cyan line is the momentum algo. And the triggering mechanism, and again, there's a whole video about this. The triggering mechanism takes two things. It takes a directional change. We'll go here to you this afternoon. It takes a directional change in the momentum algo. We'll zoom that out just a bit. And let's find here today where it turned. All right. So notice the momentum algo is trending up. Here it peaks, and you have a change of the slope. Now, there can only be three types of changes of slope. Either the slope of the momentum algo goes from up to down, shaped like an inverted U. It goes from down and then turns back up in the shape of a U, or it's going sideways and like a fork in the road. It either turns up or turns down. Those are the only three things. When this is just going sideways, it's not indicative of anything except the market is consolidating. But when you have a change in direction from down to up to down, or it's going horizontal and then like a fork in the road, turns up or turns down, that indicates that you have a change in the directional momentum. Now, what these little white hashes are, This is a volatility metric, and let's zoom in on the last couple hours of the day. Now, because these two, and there's two of these white dashes on each bar. Again, these are 12-minute bars, but there's two white dashes on each bar. When the white dashes are spaced apart, volatility is expanding. When they get close together, it's contracting. So how did you know that at this point here at 10 in the morning that this was not a move to short? Well, although the price came down below the momentum algo, the little white dashes did not. And notice how they were getting more and more narrow. The volatility dashes got more narrow, but they didn't cross through. So those volatility dashes, price moved down, but volatility did not. The volatility dashes stayed above the momentum algo, which means this was just consolidating for this move higher. So the triggering mechanism, it takes two things. It takes a change in the directional momentum of the momentum algo from up to down to up, or when it's going sideways, it needs to fork either up or down. But the trade trigger is when the white volatility dashes compress and then cross over. So in this case, you had a short trigger. Why? Because you had a change in the slope from up to down in the momentum algo, and then these dashes, and we'll zoom in on this area right here. Notice what happened before they crossed over. Notice how they started to compress right here, and here they were completely meshed, and then they crossed through right there. So that's your short trigger. A long trigger works just the opposite. You have a change in the momentum algo from down to up, and then the volatility hashes will cross from the underside to the overside. And what's cool about this is almost always when you get a significant change in the momentum algo, you'll get a back test up to it, and then it'll fail like it did here into 3 o'clock. There's 2:48, and there's 3 o'clock. All right, so again, just to recap, day trade algo, 12-minute cycle. Swing trade algo, 27-minute cycle. Most important single metric to watch is the purple pivot on this top left panel. This purple pivot I call the matrix pivot. Down here you have the intermediate cycle, and the purple pivot works the same way, only this is a long cycle. It's over 2 hours. Here you have a 5-minute Bollinger Band and a 12-minute Bollinger Band, but you've got the trend indicators. Again, white below purple, the trend is down. White above purple, the trend is up. So you're still doing what you would normally do with a Bollinger Band, which is you're taking action off a cross of the midband. Only here you have confirmation whether that trend is changing or whether it's just consolidating and it's going to bounce off and go back in the original direction. Here we have our inverted VXX. Here we have the S&P 500 advanced decline line with some oscillators overlaid onto it. Here you've got our proprietary tick indicator. And again, the white and the purple, same thing. White is below purple, the tick trend is down. White's above purple, the tick trend is up. Purpose of this is to keep you from getting out of a good trade too soon. And then here we have the oscillators on a 12-minute cycle. Now, because these oscillators are so important, I'm going to show you a live chart too. Bear with me just a minute. And let's load that up. Let me make sure I got the right one here. PCT. Here we go. All right. So once these populate, we'll zoom in on these a little bit. Now these live charts run on Zoom. You don't need to pay for a Zoom account. Zoom is free to participate in a web conference. So all you need is a free Zoom account. And we give you the live chart code each day. The live chart runs it runs the whole time the market's open. So between 5 and 6 p.m. Eastern time, we give you a new code that starts at 6 p.m. and then that runs until 5 in the afternoon the following day. Now, you don't need, like I mentioned, you don't need to pay anything to have a Zoom account. But on a free Zoom account, they'll only let you participate in one meeting at a time. So the way around that is if you want to have both live charts running at the same time, well, then what you do is you just use a second email. I mean, most people have multiple email accounts. You might have maybe an Outlook account and a Google account or a Yahoo account. All you need is you just set up 2 free Zoom accounts using different emails, and that way you can be logged into both live charts at the same time. And what's really nice is if you've got 2 computers side by side. Now this is interesting because as we're recording this, we just broke our proprietary weekly pivot at 31.51. What time is it? 9:24. Asian markets are just getting cranked up. Now on the live chart 2, we devote much of this chart to oscillators, with the exception of we've got Apple and Microsoft, and we've got that orientation with the white and the purple pivots. White above purple, the trend is up. White below purple, the trend is down. So here we have the regular day trade 12-minute cycle. This is the same chart that you saw on the bottom right hand of the main live chart. Here we have the oscillators on the 27-minute cycle. 12-minute cycle, here's your swing trade cycle. And look at how beautifully you see price move from pivot to pivot. Here we have NQ. And I didn't mention before, on the other screen, on the day trade chart, you might have noticed you had a white line and a purple line. Those are just longer cycle oscillators. So here you have NQ. Down here we have another ES, S&P 500 oscillator. So we're showing you 4 different time cycles: 12-minute cycle, 27-minute cycle. This is the intermediate cycle, the one that's over 2 hours, and this is the long one that's over 4 hours. So 12, 27, and then you have the longer cycle over 2 hours, the intermediate one, and then the really long one that's over 4 hours. So you have 4 different looks at the oscillators. And what you're looking for here is, it doesn't matter which time frame you see an oscillator, you're just looking for these levels as targets. So here we had price come down below this orange one on the 12 minute. And then after it broke lower, it got into this orange one here. So you're just looking for price to come down into these levels. And once again, the speed of the oscillators, this purple one is the fastest. And then you have the 3 white ones. The dashed white one is the fastest. And then as they get longer for this series of 3 white ones, after the dashed white one, a little bit longer cycle is the solid white one, and then the dotted white one. And then you get into these orange ones. These orange ones are trend pivots, by the way. So when you see price breaking these orange ones, okay, you broke the short-term trend right here at 77. You broke the swing trade trend here at 61. And boy, oh boy, if you break this down here at 31.10 and it doesn't recover, look out. So here you have live chart 2. And again, as a recap, you got 4 sets of oscillators. They're just running on different time cycles: 12 minutes, 27 minutes, so over 2 hours. It's not 2 hours. There's the reason we don't use, and let me mention this if you're new and you're watching these training videos for the first time. Um, the majority of traders will trade on 5-minute bars, 10-minute bars, 15-minute bars, 30-minute bars, hourly bars, 2-hour bars. We don't use any of those. The only chart that we use that's 5 minutes is that Bollinger Band chart on the top right corner of the main live chart. The reason the algorithms, the institutional algorithms, are so tricky for traders that are using those 5, 10, 15 minutes, whatever, is because those aren't the time frames the institutional algorithms use. So if you're looking at 5-minute, 10-minute, 15-minute charts, hourly charts, 2-hour charts, you're not seeing what the institutional algorithms see. So the time frames, and these two here, this intermediate cycle that's over 2 hours and this long cycle, if I were to tell you the number of minutes that are on each bar, you would never in a million years think of those numbers. They are mathematical fractals of the longest time frames. The longest time frame the algorithms, the institutional algorithms work on is over 6 hours long. It's over 6 hours. This one here is over 4 hours. This one's over 2 hours. This is 27 minutes. This is 12 minutes. The reason these all work in perfect synchronicity is because the shorter cycles are all perfect fractals of the longer ones. And what I mean by a fractal, if you take the cycle that's over 6 hours long, which it's not shown on here because it only needs to be looked at a couple times a day, and I let you know where the relevant levels are. But what I mean by a fractal, imagine you were looking at something under a microscope at just a simple 10 times magnification. And then you went to a stronger magnification, say 100 times, and then 1,000 times. By fractal, what I mean is it doesn't matter how much closer you look at it. The structure of it from a time algorithm, it is the same. Believe it or not, this 27 minutes that you got here, algorithmically, 12-minute chart is a fractal of the 27-minute chart. Just as the 27-minute chart is a fractal of this intermediate cycle chart, just as this intermediate cycle chart time frame is a fractal of this over 4-hour time frame, and this over 4-hour time frame is a fractal of the master cycle that's over 6 hours. So we could change the number of minutes on these, and whether you change it by a little or a lot, it's not going to be right. There is an extraordinary degree of specificity involved in using these very, very specific time frames. And please excuse me for being cryptic, but I have to protect certain parts of the intellectual property here for both your sake and mine. And the reason I say for your sake and mine, for obvious reasons, I have to protect my intellectual property. But for your sake, if I let everybody know what this is, it wouldn't be worth anything. Because there's an old adage in financial markets, what everyone knows is seldom worth knowing. The institutional algorithms know what these screens represent. That's the way they're built. I know what they represent. You know a great deal about what they represent, but I can't reveal the time frame that you have here or what that really long over 6-hour time frame is. But as a member, you're seeing all the visual tools, and this is a visual trading system. So you don't have to sit there and guess. You see it on your screen in real time as the market is trading. Now, this video, although this is being recorded for our members, I have no problem with you sharing this video with friends. I just ask that you only share it with people that you know. Don't shotgun it out on the internet. Don't share it with people indiscriminately or post it on social media. But if, for example, you have a friend who's interested in what we do here, by all means, I have no problem with you sharing this video, even though this is an instructional tutorial video for our members. If you have a friend that is interested in what we do, feel free to share this with them. I have no problem with that. Just be judicious about who you share it with, um, in terms of, don't shotgun this out on social media, because again, this is for us. This is for our use. We don't want to give this away to people that are not part of our community. So that's going to bring an end to the video. We've run 40 minutes here, and I'll end this video the way I end every video. We live in a very difficult, fallen world. I'm 57. This isn't the country that we grew up in. The ruler of the air, the evil one, doesn't have any new schemes. He just replays the same old ones again and again and again. And the things that the world went through in 1945, I believe we are going through again in 2020. Again, 75 years later, the evil one has no new schemes. He just plays the same old ones again. Here's the point. If you're already part of this community, you know that I'm very open with my faith. If you've watched the commercials from the My Pillow guy, he's got a book, his autobiography. And in that video, they mentioned that Mike Lindell had 14 near-death experiences. Now, I'm not going to tell you I had 14, but I'm real close. And in February of 2019, I came very, very close to dying, had a disease. Nobody knew what it was, don't know to this day. And after close to 30 days of barely being able to eat and nobody knowing what was wrong with me, I laid in bed and I said, Lord, I don't know if you're ready to call me home tonight. If you are, I'm ready. But if you're not, then I'm going to change the way I live my life. Woke up the next morning, whatever I had was gone through the grace of Jesus. And so this world we live in is difficult. And, especially if you have kids, or kids are going through things that are very difficult. You don't have to go through any of this alone. Because no matter how alone you might feel from time to time, God loves you. Jesus gave his blood for you. And he wants to get to know you better if you haven't committed your life to that. Whether you're sitting at your computer or you're in your kitchen or you're driving in your car, our Lord is with you. You may not know it, sometimes you may not acknowledge it, but he's there. He's with you right now as you watch this video. He loves you, and he wants to have a relationship with you. And if you've never accepted Jesus Christ as your Savior, I'd like you to think about that. I want to thank you for your time. God bless you. God bless your family. And I am so thankful, whether you're a member or not, that you've taken the time to watch this video. God bless you. Thank you so much.